Varun Saboo is also joining us. Varun, what's your take on SBI, Axis Bank, some of these large banking majors?
Yeah, hi. Thank you, Ina, for inviting us again on this show. So we remain very constructive on the banking space, particularly Axis, SBI, etc. If you see consistently operationally, these companies have been performing quite well. Every quarter we see there's been a Q-on-Q improvement. Again, this time the kind of numbers Axis has reported, it's been phenomenal. If you see overall deposit growth has been strong. Their NIMs have expanded, which wasn't expected at all. So that is the reason why you're seeing the spike in Axis. While SBI, obviously, they have also been consistently reporting strong numbers. It's been a very reasonable stock in terms of valuations always. And something like what came into Kotak yesterday night, which we saw, that helps because there is some allocation shift which happens whenever such things happen. And the safest name is SBI, where one would go into. We remain very constructive both on SBI and Axis going forward also. And one has to keep in mind that these are not over-owned the way ICICI is. So that helps Axis and SBI further. Yeah. So we'll remain positive.
Right, okay, that's the take coming in on Axis Bank. Varun, what's the take about on Kotak though? It's been quite the, fall, 11%. Does it get anywhere close to a buy now?
See, these are times when there is some uncertainty which has come over a name which has been one of the best names in terms of governance, etc. This has been one stock which is a darling stock for the market, right? Unfortunately, there is something coming there, and that's the kind of reaction you see. Although the portfolio is small, this one, but it was the fastest growing one. Second, your online channel goes down for some time. We don't know when the resolution will happen. So there is an uncertainty around it. But yeah, one thing investors need to keep in mind that this is a great franchise built over time. So if anything, one has to think about accumulating it from here till the time there is resolution. I don't think so. Stock will move up in a hurry. But yeah, I mean, these are the times when you have to accumulate such names, sit patiently. Else, these stocks have always remained expensive. So this is a time when you're getting it cheap, and it can only happen when such events happen. I don't see it running up in a hurry, as I mentioned, but yeah, this can be a time where one should slowly start accumulating it.
Okay, start accumulating. That's at least a verdict coming in from the sell side, because that's even Nitin Agarwal of Motilal Oswal told us on Kotak Mahindra Bank, and he also believes that Axis Bank is ripe for a re-rating. Listen into that slice of the conversation.
On valuations as such is already at a attractive level when you compare it to how it has traded in the past. But the valuation premium for the bank has always been because of the high quality, very strong governance, risk management processes, and compliance, right? And with this restriction from the RBI, there has been a small question mark that has come on that until the time it gets resolved. And we have seen in the past incidences wherever a ban has come into force, it has taken at least few quarters to more than a year for it to get lifted. And which is where this uncertainty is playing heavy on the stock. Otherwise, on the valuation count, the stock was already has been undergoing a phase of derating, and valuations from where it used to be like more than 4-time book, it already came down close to 2 times. In the near term, it can recover some of the underperformance that it has had versus its other larger peers. If this profitability levels what Axis Bank has been reporting continues, and management further gets another 3 years from the RBI, then there is a case that Axis Bank will continue to re-rate in the next term.
Okay, so that's a take on the banking majors, but SBI is the other one you need to have on your radar. A solid 5% plus kind of move, taking the stock to an all-time high level, and doesn't look like it's stopping at the moment. 800 on this one. Naresh, what's the timeline you'll peg for SBI to hit the 4-digit mark now?
So when we get into such momentum, you just want to ride it out here. It could surprise on the way up because finally the stock has got momentum. So my view is this year could be the year where by end of the year we could be there.
The year you're expecting the 4-digit mark on SBI. In the meantime, it is names like Godfrey Phillips, MCX India, Bharat Forge which are gaining ground. In fact, MCX India is one candidate that my colleague Sharad flagged out in the morning as well in terms of cover as to what he was expecting and the market mood on MCX. And now he's joining in to talk to us about one more stock as part of his cover segment. What's the latest that you're picking up, Sharad, and which is the stock in focus?
In focus is Godfrey Phillips, and what we are gathering from the dealer room, the buzz is that buying is coming in from an FI desk and also certain institutional clients. Importantly, the volumes has picked up almost 6 times its 20-day average, and the stock has been seeing accumulation over the past 5 trading sessions, rising almost 15%. Importantly, the key FIs already invested in the company include Jupiter Fund. Now, there are 3 important triggers for the stock which the street is looking at, and there is an interest coming from conglomerates, especially for their retail division. Now, this retail division contributes roughly 10% of the total revenue, and that is what the market is looking at. Also, there has been a good response coming in for the Stellar brand, especially the smaller priced cigarette sticks as per the channel checks. And interestingly, in the third quarter of FY24, their volume growth stood at 10%, while there was a degrowth coming in when it comes to VST Industries as well as ITC. So, of course, the volume growth outlook for the March quarter would be something which everybody would be looking out for. But right now, there is an institution buying happening when it comes for Godfrey Phillips as per channel checks.
Okay, that's the take coming in. Godfrey Phillips is the one which is on everyone's radar. In the meantime, we've of course been marking out all the winners. Look at Concor as well, for instance. That's holding up a good 3.6%. 1,000 rupee per share is where the stock has scaled up to. There's Piramal Enterprises, which has seen a very good move. 3.5% of uptick coming in there as well. There's, of course, Can Bank, which is higher by about 3.5%. Apollo Tyres looking very strong. BHEL has made a strong 3% move as well. And then, of course, Alchem Laboratories, Balkrishna Industries, Adani Enterprises, REC, Sun TV, a lot of these stocks are looking very, very buoyant indeed. Naresh, specifically within the entire PSU banking pack, other than SBI, what's looking like a good long right now?
So that would be first PNB, which has been in a strong uptrend. The stock has made multiple tops around this 135 to 137 mark for the last 3 months. So if that breaks out, we open up a target towards 160 odd levels. So PNB is first, then there is Bank of India, which has also gone through a sideways consolidation, very tight range now, 130 to 150. This could break out above 150 going forward. So these 2 small names look interesting. And finally, Bank of Baroda is the next one, which is on verge of a similar breakout. So the smaller ones look interesting as well now.
Okay, point taken. So that's a view coming in on some of these big buzzers at the moment. But in the meantime, it's Indian Hotels which is taking a sizable knock at that 5% cut, and Macrotech as well. Varun, what's your view? Were the numbers really that bad for Indian Hotels as well as Macrotech, or what really explains the move?
No, so in Indian hotels, one has to keep in mind that the stock has seen a very, very sharp up run, right? We have been hearing about travel, tourism, etc., doing exceptionally well. So this stock in this entire period has gone up to 28 times EV/EBITDA, which is like the peak multiple which they had seen during the 2004-7 times, where it has now come back to. So these are peak multiples. So obviously one has to expect some correction here. It's only the opportunity that's giving you to buy it again. One has to keep in mind that the biggest spend today, which people are willing to shell out their money on, is around hotels right now. You look at the kind of pricing uptick we are seeing. I remember the times when we were not okay paying 8 to 10,000 rupees for a room. Now people are paying 25-30,000 rupees for a room. So we're going on hearing 10 to 15% kind of price rise that we are hearing in the average room rents. And that keeps on, this feedback keeps coming. So just to highlight our teams, we had about 10 people who went across some 15 states across India, and we did an on-the-ground check. And what we get to hear is that the pricing has been on a big surge, and we're going to be seeing overall across hotels a 10 to 15% further price markup. So yeah, I think we remain very optimistic on the name. We don't think it's going to give you a sharp re-rating from here, but yes, this is going to be a great compounding story from here.
Right. Okay, that's the take coming in on Indian hotels right now. That, of course, is taking a bit of a beating today after that solid move that the stock has seen in the past 52 weeks. In fact, we chatted with Puneet Chatwal as well. Here's what he told us about, the visibility in the numbers going forward.
We feel we are very well positioned with the number of locations, with the diversity of our top line, as well as the kind of portfolio we have divided over leisure destinations, business destinations, and more than 50 spiritual destinations. And we are at almost 14% of our top line is coming through the new businesses, and the projected short term is at 20%. But that is something the management worked upon in the last 5-6 years, is driving operating leverage in our traditional business, in our iconic assets, by implementing and executing on effective asset management and driving margin expansion through the capital light business model. So all in all, I would say if we can maintain more than 15% of the total share of the market, which is in terms of branded supply of rooms is 180,000 rooms, less than 200,000, then we'll continue to drive growth, drive penetration, drive premium results.
Okay, numbers for Vedanta flashing for you at the bottom of the screen, but for Vedanta, the story is a lot more to do with how they're managing the debt, what happens with respect to the various restructuring which have been made there, and of course the dividend story that has played out. But separately, IT companies have managed to disappoint us so far, barring TCS, which was an okay set. Infosys as well as Wipro was a bit of a disappointment, and Tech Mahindra is a number that we're expecting today. With Tech Mahindra, we're expecting that the slide is going to continue, 1.4% cut coming in on constant currency. Dollar revenue is expected to be down by 1%, and the EBIT margin might see a bit of an improvement of 160 basis points, because last quarter there was a big exceptional that had led to a sharp drop in profitability as well. So we're expecting a sharp improvement in profitability at the moment. Deal wins are likely to be around that $600 million range. Of course, watching out for what the management has to say about the outlook, the communication vertical, any new strategy update coming in from the new CEO is something to watch out for. And Mindtree was the other one which we were watching out for. Actually, it isn't that bad a reaction versus the kind of numbers that the company has posted, because the margin decline was quite sharp for LTI Mindtree, as well as growth was a bit, subpar. But Varun, what's your take on the IT counters? The kind of disappointment that we have seen is one part, but the second part is that you're not hearing anything about any recovery even at the end of the year. Do you think the sideways move on the IT sector is just going to get a lot more elongated?
I don't think so. See, if you go by the commentary which the managements have come out and they've spoken about. So first of all, when we speak about Infy, TCS, to an extent Wipro, all of them mentioned that there's a lot of pent up which is visible in BFSI vertical for IT companies. Now, if there is pent up there, most Indian IT companies have a heavy skew towards BFSI as a vertical for them in terms of their revenues. So this is a very good time to accumulate IT because there is uncertainty in the US. There are concerns around how when the interest rate cuts are going to happen. There's been a lot of volatility in the statements which we have heard from US Fed, and that's what is keeping the IT companies under check, right? I think the opportunity is there. Stocks have corrected sharply, particularly mid-cap IT companies, because of the commentary around margins have been a little weaker. One has to read their commentary and the tone. So they have mentioned that if the current situation prevails, then they expect a bit of a delay in margin recovery going forward. So it all depends on how US interest rates will shape up. But one has to keep in mind there's sharp correction which has happened. These are great cash flow generating businesses. There's a time when you have to own them. If things start turning around, if outlook on interest starts becoming favorable, these stocks will not be available this cheap. So I think one has to accumulate these names. IT stands as one of our key sectors, top sectors from here, which we are recommending. There's a time when no one is looking at it, one must buy it.
Okay, buy IT, buy Kotak, that's the word coming in from Varun. In the meantime, let's just bring up Vedanta as well on your screens right now. The PAT, of course, has missed the street estimates by a huge margin, but that's not quite the case for the margins. They're largely in line. 24.8% is what we were anticipating, 24.6 35,517 is what they've actually clocked. And the EBITDA as well matches up with the street estimates. 35,509 on the top line is a slight bit of beat. We were anticipating about 34,100 odd crore rupees. Of course, the lower commodity prices that we were anticipating are going to weigh heavy on the quarter this time around, and higher volume in zinc is going to offset the marginally by prices and lower COP in aluminum. So let's see what the commentary really is from Vedanta, if there is any, on where they see the price trends headed for the quarter ahead. But that's that on Vedanta. It's really been a little bit of a volatile reaction coming into the numbers, given that it's such a mixed bag right now. But Kunal, just taking a leaf from Vedanta, metals has been having it very strong. You continue to like Hindustan Copper, or are there some other names as well that you're betting on now?
So there are a few more names. I think, for example, JSW Steel has given a fresh breakout, and that stock has been a huge underperformer over the last, I think, 6 months or so with respect to the bigger peers or the peers, from the metal names like Tata Steel, etc. That's another name which I think above the 900 mark looks very attractive. Even from a trading play, I would look out for say 975, 980 as a immediate target for JSW Steel. And SAIL is the other name which I believe looks extremely strong. The stock has given, or rather it's tested the 150 mark, I think 4 or 5 times in the last 6 months or so. And finally the stock has managed to break out, and that has happened after almost 30 to 35 points of correction prior to the breakout of that 150 mark for SAIL, which means on the upside we could be looking at 185 to 200 as a potential target for the stock. So lot many other names which have given a breakout, and that's why I would believe that this may not just be a very short-lived move for the entire metal counters, but this could be a more prolonged uptrend for these stocks, something which I would believe could last for at least a couple of years.
Okay, point taken. On that note, Varun, we let you go. Thanks so much for joining us today.
If you like this video, then like, share and subscribe to ET Now.